Onsemi dropped 13.3%. Lab scores at 53 out of 100. Hold. A 14% pre-market plunge exposes a sudden inventory overhang in its power semiconductor portfolio. That overhang slashes near-term cash flow, eroding the thin margin cushion the lab's 53 rating reflects. Stay tuned as the lab dissects the supply chain bottlenecks, pricing pressure, and wafer yield fallout driving this shock. Pre-market alert. ON fell 13.3% to $102.90, proving its sub-60% SiC wafer yield is an existential structural liability. SiC, silicon carbide, the wide bandgap semiconductor tolerating high voltages, is Onsemi's core bottleneck. While competitors scale to 200mm wafers, Onsemi relies on legacy 150mm lines. This legacy process increases defect density, the number of structural crystal flaws per square centimeter. High defect density caps automotive gross margins. Buying Synaptics adds low-margin IoT, Internet of Things, the network of connected consumer devices. This acquisition dilutes their engineering focus on high-power packaging. This $7 billion all-stock dilution confirms Onsemi cannot solve physical silicon constraints organically. Massive sell-off reflects a desperate, margin-dilutive pivot. Quarterly financials showing modest revenue momentum for Onsemi. Pre-market alert. ON plummeted 13.3% before the bell as its $7 billion acquisition of Synaptics triggers severe share dilution. By Q4 2026, escalating trade war tariffs will compress Onsemi's gross margins. The lab expects a painful contraction of 250 basis points. While TSMC's blowout $417.0 billion new Taiwan dollars revenue signals an AI acceleration wave, Onsemi faces a monetary undertow. With unemployment at 4.3%, automotive demand is softening. This all-stock agreement dilutes investors as the Fed holds rates at 3.63%. Capital is actively rotating out of automotive silicon and into high-bandwidth AI infrastructure, leaving Onsemi exposed. This friction makes the 8.8% recession risk highly consequential. Onsemi reported earnings per share of $0.64, beating the Wall Street estimate of $0.62 by 3.3%, a solid beat that signals strong execution. Onsemi is trading below its 20-day average, currently at 102. Pre-market alert. ON plunges 14% on a $7 billion all-stock Synaptics deal that Wall Street heard as desperation, not synergy. Management's headline. Onsemi bets on physical AI with $7 billion Synaptics acquisition. 3 words designed to make you feel the future is here. Edge AI, hyperscale, trillion-dollar TAM. What they don't say, this is a margin trade disguised as a growth story. Synaptics' gross margins are 52%. Onsemi's are 48%. The math doesn't add up unless cost cuts hit R&D first. The lab decodes the real signal. Insiders net sold 90,000 shares in 90 days, right into the deal announcement. That's not confidence. That's cashing out before the dilution. EPS beat by 3.3%, but R&D spend dropped 4%. The momentum breakdown for Onsemi. RSI sits at 43, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Pre-market alert. ON plummeted 14.1% pre-market as automotive silicon carbide demand hits a massive near-term demand wall. The bull case rests on their proprietary Elite CC, silicon carbide, the wide bandgap semiconductor tolerating triple the voltage of silicon. But the bear case is reality. Elevated 11% short interest. The percentage of floated shares shorted signals Chinese pricing pressure. Stifel confirms this risk, maintaining a hold rating with a $107 price target. Our AI score of 53 dictates our conditional call. If on hold support, the price floor where buying prevents declines, at $110.17, expect a recovery to $120. If that level fails, the stock will slide directly to $108. Here's the macro picture shaping Onsemi. U.S.-China trade restrictions and the CHIPS Act directly impact on semiconductors' power discrete and image sensor exports to Chinese automotive OEMs like BYD and Geely. However, domestic manufacturing subsidies for its East Fishkill, New York fab help mitigate these geopolitical risks by securing local supply chains for critical silicon carbide components. The massive industry transition toward high-efficiency automotive electrification and industrial automation drives ON's proprietary EliteCC silicon carbide platform. This dominant trend is expanding beyond traction inverters into AI data center power shelves, where high-voltage EliteCC M3S MOSFETs optimize power density and reduce thermal dissipation. The primary near-term upside catalyst is a rapid recovery in global automotive inventory replenishment alongside new design wins for their top-cool MOSFETs. Conversely, the biggest downside risk is prolonged industrial market stagnation and pricing pressure from Chinese domestic silicon carbide competitors. ON's 53-hold score isn't just a number, it's a supply chain warning. Are you holding on? Drop your entry price in the comments. This isn't financial advice, just engineer-level analysis. Markets move fast, margins shift, and past performance never guarantees future results. Do your own research before any trade. Subscribe for the data Wall Street misses. We dissect the die sizes behind the headlines. If you want our full breakdown on Intel, the link is in the description. Stay sharp, stay long.